Right now, there are people watching this video who owe the IRS more money than they've ever owed anyone in their entire lives. Some of them have been ignoring the letters, some of them have been hanging up when the phone rings, and some of them genuinely believe that if they just wait long enough, the problem will somehow disappear on its own. It won't. But here's what most of them don't know. The IRS doesn't want to destroy you. They want to get paid. And because of that, there are actual legal pathways built into the tax code that allow you to settle massive debt for far less than you owe, or even pause collection activity entirely while you get your finances in order. So in this video, we're going to separate what's real from what's just hype. By the end, you'll walk away feeling calmer, clearer, and far more confident about what you're actually buying, and more importantly, why you're buying it. Drop a comment below and let me know the exact day and date you're watching this from. I love seeing where and when you're tuning in. And real quick, if you appreciate content that's built from scratch, thoughtfully researched, and never copied, support the channel by subscribing and commenting Henry's Market HQ below. It helps this channel grow more than you think, and I truly appreciate it. Let me start with something that might surprise you. The number on that IRS notice sitting in your mailbox, the one that makes your stomach drop every time you see it, is almost never the actual number you owe. Most people read that letter, see a six-figure amount, and think that's locked in stone. It's not. The IRS compounds interest daily. They charge penalties. They tack on failure to pay charges. What started as a legitimate tax bill 5 years ago has grown into something that looks completely different now. I've seen cases where someone owed $90,000 in actual taxes, but the total balance, including penalties and interest, had climbed to $140,000. The real number is almost always higher than the original bill, but understanding how it got there is the first step toward actually handling it. When you understand that the debt is growing every single day, roughly $20 to $30 a day on a $100,000 balance, it stops feeling like something you can ignore. It feels urgent. And that urgency is actually your friend, because it's the thing that pushes you to take action. Here's what happens when you ignore it. The IRS has tools that most people don't even know exist, and they will use them. They can file a federal tax lien against your home, which means they have a legal claim on your property and everything you own. If you try to sell that house, the IRS gets paid first. They can levy your bank account, which means they can walk in and take money directly from your checking or savings account without asking permission. They can garnish your wages, which means your employer will be legally required to send a portion of your paycheck directly to the IRS instead of to you. They can take up to 15% of your Social Security check if you're already retired. And yes, they can revoke your passport. That's not a threat. That's a tool they actually use. If this is making sense so far, go ahead and hit that like button. It genuinely helps this channel reach more people just like you. But here's what matters. All of this is avoidable if you know what options you actually have. Most people in this situation fall into one of two categories. The first category is people who legitimately cannot pay their debt in full right now, but they have some income and they could pay something over time. The second category is people who are in genuine financial hardship. Their income is too low, their expenses are too high, and they simply cannot afford to pay anything at all. Both of these situations have legal solutions. Both of these situations have actual pathways forward. The tragedy is that most people never find out about these options because they're too scared to open their mail or answer their phone. They think if they ignore it, it goes away. They think they're going to get arrested. They think they're going to lose their house tomorrow. And because of that fear, they miss the exact help that the tax code actually provides. The first option, and probably the most famous one, is called an offer in compromise. This is a legal settlement where you offer to pay the IRS a lump sum that's significantly less than what you owe, and if they accept it, that debt is completely gone. The amount they'll accept depends on your reasonable collection potential, which is basically a formula the IRS uses to calculate what you could realistically pay them over the next 6 years. If you have no assets, very low income, and high expenses, your reasonable collection potential might be only 20 or 30% of what you owe. That means if you owe $100,000, you might be able to settle for $20,000 or $30,000. Is it possible? Yes. Is it easy? No. You have to complete financial statements. You have to prove your hardship. You have to show the IRS that you literally cannot pay more than what you're offering. But it happens. I've seen it happen. And for people who have some savings or who recently came into money, An offer in compromise can be the fastest exit from a debt that feels otherwise impossible. The second option is an installment agreement. This is what most people actually qualify for, and it's exactly what it sounds like. You make monthly payments to the IRS, and they give you up to 10 years to pay off the debt. The monthly payment is calculated based on your income and your ability to pay. You might be paying $200 a month. You might be paying $2,000 a month. But the key is that you're in control. You're paying something. You're not in default. And the IRS stops the aggressive collection activity while you're in compliance with the agreement. There's a financial setup fee, usually between $35 and $125, depending on how you apply. But once it's in place, you have breathing room. You know exactly what you owe each month. You can plan your finances around it. And this is the option that keeps most people in their homes and keeps their paychecks whole. And this is where most people stop reading, stop watching, stop paying attention. But the ones who stay are about to understand something that could completely change how they see their money. There's a third option that almost nobody knows about, and it's called a partial payment installment agreement. This is different from a regular installment agreement. In a regular agreement, you're committing to pay the full amount over 10 years. In a partial payment installment agreement, you're only committing to pay what you can afford, and the IRS accepts that you might never pay the full debt. The statute of limitations on IRS collection is 10 years from the date they assess the tax. If you're in a partial payment installment agreement for that entire 10 years, and you only manage to pay 40% of what you owe, that debt is gone when the statute runs out. The IRS writes it off. You're done. This is a real option. It's in the tax code, but most people never find out about it because it requires navigating the system correctly, and most tax professionals don't explain it well. The fourth option is something called currently not collectible status. This is for people who are in genuine financial crisis. You've lost your job. Your income is below the poverty line. Your expenses exceed your income. You cannot pay anything. In this situation, you can request currently not collectible status, and the IRS will literally pause all collection activity. They stop garnishing wages. They stop levying accounts. They stop filing liens. The debt still exists. The interest still accrues. But the aggressive enforcement stops while you get your life together. This status typically lasts for 12 months, and then you can request it again if your situation hasn't improved. It's not a forgiveness program, but it's a lifeline for people who need time to breathe. The fifth option is bankruptcy. Now, this is the one everyone worries about, and the truth is more nuanced than most people understand. You cannot discharge all tax debt in bankruptcy, but you can discharge certain types. If your tax debt is more than 3 years old, if you filed your return on time or before the deadline, and if you haven't had any fraud or evasion issues, that debt might be eligible for discharge under Chapter 7 bankruptcy. This is extreme, and it should only be considered after you've explored every other option. But it exists, and for some people, it's the right answer. The reality is this: you have options, real options, legal options, options that the IRS expects people to use. The system is designed with these pathways because the IRS knows that not everyone can pay their full debt in full right now. What they require is that you engage with them. You respond to their letters. You answer their phone calls. You file your tax returns on time. You show them you're trying. When you do that, the system works. When you ignore it, the system destroys you. The first step is figuring out your actual balance. Request a transcript from the IRS. Call them. Request form 4506C. Get the exact number. Then figure out which category you fall into. Can you pay something over time? Can you pay a lump sum? Can you pay nothing right now? Once you know that, you know which option makes sense. An offer in compromise makes sense if you can come up with a lump sum and you want to be done. An installment agreement makes sense if you want a predictable monthly payment over a set period. A partial payment installment agreement makes sense if you can afford something, but you know you'll never pay the full amount. Currently not collectible makes sense if you're in true crisis and you need time. Bankruptcy makes sense if your debt is old and you're willing to take that nuclear option. I want to be clear, I'm not here to sell you anything. I'm not a tax attorney. I'm not a CPA looking for clients. I'm here because this information changed the way I think about money, and I want it to do the same for you. Too many people suffer in silence when they don't have to. Too many people let fear make their decisions for them, and too many people miss the exact help that's legally available to them because they don't understand the system. You do now. You have that understanding. What you do with it is up to you. If you owe 6 figures to the IRS, you didn't get there by accident. Usually there's a story, a business that failed, income that came in unexpectedly, and taxes that didn't get paid, a divorce that left you responsible for debt you didn't expect. Whatever your story is, it doesn't have to define your financial future. You have 5 legal pathways forward. You have options, and the sooner you choose one, the sooner this stops being something that haunts you and becomes something you're actually managing. Start today. Get that transcript. Make that call. Take control back. If you are benefiting from our topics, please subscribe, like, and turn on the bell notification so you can see our new videos early.